The cloud-based communications company missed on its Q2 and full-year guidance. Part of the reason for that miss is that one of its top clients, Uber, has pulled back some of its business.
The playing field in tech is always shifting, and innovation is the reigning champ. In Silicon Valley, it can be tough to roll with the punches. Can this software newcomer pick itself up off the mat?
What the heck just happened to the stock of Twilio? While we're out here in San Francisco, I think we need to check in with this cloud-based communications expert because the stock did just implode after the company cut its numbers on Tuesday night. It plunged from just under 34 down to 25 over the next 24 hours, and all I can say is ouch. For those of you who don't know, Twilio software helps app developers create and manage reliable communication systems via the cloud. And their platform is used by nearly every app that sends you text messages, from Uber to Twitter, Airbnb. And you know I've been a big fan of this company, but when reported on Tuesday night, Wall Street was not happy. Even though Twilio's sales and earnings came in better than expected, a lot of new clients, the company had to slash its guidance for the rest of the year, and it scared off investors. The problem? Its largest customer, Uber, is changing the way it handles its communications and offloading some of its business to Twilio's competitors, and that's what got the stock eviscerated. Now, nobody wants to hear that your company's top customer is hitting the brakes. So we got to figure out, can the stock recover? Let's dig deeper with Jeff Lawson, the co-founder, chairman, CEO of Twilio, get a better sense of the quarter and his company's prospects. Mr. Lawson, I am always happy to see someone after a tough couple of days. You didn't say, hey, listen, I can't talk. You said, let's come and talk. So first, I have to tell you, I got it wrong in that I knew that Uber was a great client, and I didn't see past that. I couldn't believe that someone could have the luxury of having Uber. Why don't you walk us through it with an idea of answering a question that's asked by two different research firms. One is, once bitten, twice shy. We were wrong to underestimate the Uber risk. That's where I feel I am. But then the Uber reset creates an excellent buying opportunity. That's where I want to be. So maybe you give us the arc of what happened.
Thank you, Jim. Obviously, the news about Uber is not one we were happy to share, but we did feel it was the right thing to do. Uber is our largest customer, and if you annualize their Q4 spend, they were on track to spend $60 million on Twilio in the year. And you just think they're an outlier at that level of spend. And when you're spending that much on one vendor, they wanted to get better control and better visibility into how they were spending.
And that's what, about 17% that fourth quarter?
Yeah, that was about 17% of revenue. And so they wanted more visibility, more control over that spend. And so we're working with them. They continue to be a great customer. They will be a great customer of ours, we believe. And so we have great relationships throughout the company. But as they start to understand their spend and understand how they want to do it and break it down a little bit, look at it by geography and look at it by use case, we're going to help them do that. But they're a great customer.
But you did say that through each quarter it will be lower, and that will impact 2017 in a negative way.
Yeah, because of the size of the spend and how important of a customer they are. When we got an inkling that they might change how they're thinking about communication spend, we wanted to be transparent and get that out in front of investors. But we do believe they will continue to be a very important customer of Twilio.
Now, okay, I want to understand, it wasn't like they found a better mousetrap, right? That's really important to me. I don't want to tell people, you know what, Twilio is good, but there's another company out there, and they're the first one of many that are going to really migrate away from your company.
What they've done is they have a multi-source strategy. What they've essentially said, they've built the ability to more fluidly move around how they're thinking about their spend based on geography and based on their use case. And so they're bringing in several different vendors all around the world to think about how they're doing this spend. So it's very different than saying, oh, there's another vendor that we're coming in to replace. Now, that said, there are, dual source is a thing, and many companies have a dual source strategy for key technologies in their company. Some customers do that for reliability and resiliency and things like that. And that's not communications alone, that's databases and operating systems and all that.
And your second largest customer, WhatsApp, has always had this, right? It's not like WhatsApp is going to pull the plug because they've always had this multi-view of things.
Yeah, WhatsApp has had a multi-source strategy for a very long time, and you just think about it, at that level of spend, it can make sense for a company to look at how they spend it in a multi-vendor way. But if you think about our customer base, after WhatsApp and Uber, our next biggest customer is only 2% of revenue. And so it's a very different game at that level of spend versus where everyone else in our customer base is.
There's no way I can say I can asterisk Uber. That was huge. But this otherwise, until they said that, there was a lot of momentum. You had a lot of new customers. It was an extreme extraordinary quarter until this bad news occurred, right?
Yeah, obviously, aside from Uber, we did have a very good quarter.
Right.
We added over 4,000 new active customers, our best quarter since we went public in that measure. Our base customers outside of Uber grew 60% year over year. We added George Hu as our COO, and he was the COO of Salesforce through $5 billion of revenue there, scaled that company wonderfully. And so outside of the Uber news, which obviously we weren't excited to share, we do feel we had a great quarter and the business inputs are very strong.
Let me ask you as a business person, what do you do if you have someone, there's no way you could call Uber and say, guys, you're such a big portion of our revenue, we don't want to do business. I mean, and there's always, all of us have to recognize that any customer at one point could have a different a dispute or something be different. What choice did you really have with Uber? You had to roll with the punches until they just, whatever happened.
And we have a great relationship at Uber, so I want to make sure that you know that. But you're right. When a customer grows, and this is part of the power, but also a little bit of the risk of our great usage-based model that drives customer expansion very strongly. That customers can get very big, and that's obviously up to us to manage it. But at a certain level of scale, as Uber got to, right, they make decisions they're going to make, and every company is going to make their own decision about how much they want to trade off, risk and price and quality. And this substantial undertaking at Uber is really based on the size of that spend, which got so big.
All right, well, then one last question. I want to be sure the core business, tons of money to fund, right? We're not like in a situation where we find without a big Uber client, there's cash flow problems, there are issues. No, right?
No, we're continuing to invest. We have a leadership position in a very large market, and we feel great about our position, about our product, about our customers, and so we continue to invest forward.
All right. Well, I want to thank Jeff Lawson, who came on. Now, understand, this was a tough week for Jeff, but he came on and he talked about it and he addressed head-on the problems, and that's why I think Jeff Lawson is a guy that is worth banking with, founder, chairman, and CEO of Twilio. Read the research, make the decision yourself. Mad Money is back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.